Good morning. This is Larry Edelson with an Uncommon Wisdom special video update for Monday, September 26th. Needless to say, the markets are in complete pandemonium right now, and as I've been predicting, we've seen a pretty wicked, sharp sell-off in gold and silver. Indeed, this morning in Asian trade, as I'm recording this, about an hour ago, gold had fallen another $100, as much as another $100, and silver almost $4 down to the 26 level, threatening to break even further. However, as we come into the New York opening, which is just a few hours away now, we're seeing a little bit of a rally back in gold and silver. And I'll explain to you right now what I'm seeing in the precious metals, because I've been harping on everybody to stay away from them in the short term. Basically, what we're seeing is this. Although the fundamentals remain very bullish long term for precious metals, indeed all commodities, all tangible assets, because of the twin sovereign debt crises in Europe and the United States, which will require unprecedented additional measures by the Federal Reserve and the European Central Bank, which will inevitably lead to more printing and debasement of the euro and the US dollar. In the short term, we are seeing capital scared out of its wits, and that capital is liquidating virtually every asset on the planet. And by default, since there are so many dollars and so many outstanding debts denominated in dollars, liquidation and frightened, scared to death capital by default goes back into the US dollar, into cash, into liquidity in the form of US dollars, and of course lately into treasury bonds as well, and out of virtually all assets from A to Z, especially the precious metals. Now, one would normally think that with Europe on the verge of default, with Greece certainly on the verge of default, that gold should be going through the roof. But as I've warned, okay, there are larger cycles at work here, and right now you have a worldwide panic going on, and that by default is putting a lot of money into cash and liquidity and coming out of other markets. Investors and big hedge funds fear margin calls, debt write-offs, etc. So they're parking the money in the most liquid, safe investments around, which still remain the US dollar and, at least for now, treasury bonds. I argue, as you've seen in my writings, that investors, even the most savvy of them who are doing that, are jumping basically from the frying pan into the fire. The dollar is not a safe haven. Treasury bonds are not a safe haven. They are, at best, a mirage of safe haven in the short term. Nevertheless, I have kept you on the right side of these markets. I've warned you to stay away from silver. I've warned you not to buy any new positions in gold. In my Real Wealth Report, I've hedged up the gold positions. In some of my trading services, I've taken outright speculative short positions in gold and silver via call and put options on inverse ETFs and regular plain old ETFs in the precious metals. And many of my followers are really racking up some incredible gains right here. Now, let me give you an update. Let's go right to the charts. Gold fell to as low as 1535 this morning in Asian trade. Down here, you can see it in support. It did find support at this line that you see here. It's now rallying back up. We did hit several signals, daily and weekly sell signals in gold last week, so I do not believe that the rally off of this morning's Asian trading lows in gold and silver are the final lows. A bounce is overdue, and we're getting it as of this morning. It may continue. We may even see gold turn positive slightly for a couple of days here, but I do believe we are heading down to at least the 1483 level, and perhaps at this point even a tad bit lower than that, given all the sell signals and damage that's been done in the gold market. Now, let's turn our attention to the silver chart. Silver has had just an incredible second crash, as I warned. We got as low as $26 in Asian trade this morning in silver. We've popped back up to the 29 level. We did pierce the $30.40 level on Friday, which I put in my writings was a very, very important level. That is a weekly sell signal. So I wouldn't be surprised that we see additional new lows in silver down around the 23 level and quite possibly even lower than that. It's a little bit too soon to say. However, I will say that any rally you see here, if you're short, I would take some profits and I would look to re-enter short positions on aggressive speculative trades with tight risk management, looking for another wave down after the dust settles for a couple of days in here in silver. I want to take a look also at the dollar index, update you there. We've had, as I mentioned, by default, when investors panic and liquidate assets, everything under the sun, by default, that is at least short-term bullish for the dollar. And indeed, we have seen the dollar get up just to that 80 level that I mentioned over the last few weeks in my videos, and now it looks like a dollar might be selling off a little bit, which would give an impetus to a little bit of a consolidation and floor of support in the gold and silver market. However, any pullback in the dollar will probably be met with another wave to the upside in the dollar and another decline in gold and silver and commodities. The latest on the European crisis and the Greek crisis, they are trying, of course, to avoid a default. I don't believe that will happen. I do believe Greece has no choice but to default down the road. It could happen tomorrow, it could happen next week or next month. In reality, the best thing that Greece can do is default on its debts, break away from the euro, bring back the currency, its drachma, devalue the currency, and kickstart that economy. It is in a depression, and the only way out is by defaulting, kickstarting the economy by taking back its own currency, devaluing that currency, and giving some new life to exports, give a kick in the butt to some inflation. And as the economy picks back up, they can always come back to the table and try to pay off some of their previous debts. That is my view. I'm pretty confident that's what we're going to see happen. The question is really timing at this point. There's concern, of course, that if Greece defaults, Italy will default, Spain will default. Those are, I don't believe Spain or Italy default, but I do believe the euro currency will bust apart at the seams. The only way they can keep the euro together would be if the European Central Bank issues bonds, consolidates all the debts of the member nations, and basically renegotiates everything with investors and gives the euro more time to survive, if you will, and policyholders and leaders get to work on putting in place the fixing the terrible mistakes they made when they launched the euro currency. I've written about this extensively. Just refer back to my writings there. Now, of course, let's go to the Dow Industrials. Dow Industrials has broken down. It has not given me an all-out sell signal yet on my proprietary algorithmic trading signals. However, in pure technicals, as you can see from this chart here, the Dow is breaking down. We'll probably see a little bit of a rally back up to the 11,300 level, but as of this moment, the Dow is firmly on target to move down to the 9,000 level over the coming few weeks. So please stay tuned to my recommendations there. I have my speculative trading subscribers are short the S&P 500 via an inverse ETF and options on an inverse ETF. And I will be updating you, of course, on a regular basis in my published issues for that trading service, and for my real wealth subscribers as well via flash alerts, such as I sent you last week, and as needed going forward. Again, stay tuned. I will try to update you with special videos as often as necessary. This is Larry. Have a good day. Bye-bye.